All right, guys, what's going on? It's your boy Henry, and welcome back for another weekly analysis. We're gonna run through this real quick, no getting off topic today, and let's get right into it, right into the TA. It rhymed. So yeah, we're gonna be going over the 1 hour chart, the daily chart, the weekly chart, and the monthly chart. We're going to try and complete this under 10 minutes. I'm gonna try and hold myself to that. I'm gonna continue to remember that throughout the video so I do not get off topic. Have to stay on topic, which is strictly TA. All right, so we have a falling wedge here on the VIX. All right, and we have a rising wedge here on the SPY, both on the hourly time frame. I would say this is a pretty defined rising wedge here now that we have this touch point. All right, Bukowski says you need 3 touch points on one side, 2 touch points on the other side before you break out. If you don't have that, it's not a wedge. Okay, it can't be. All right, and actually a rising wedge needs to take, I believe it is 2 weeks to form for Bukowski as well. Yep, we got that covered. I hope it's not 2 months. I think it is 2 weeks. We can actually look real quick. The patternsite.com. Where's the search? Come over here. Come over here. Come over here. This is a crazy search. Very weird looking one. Falling wedge. There. All right, falling wedge. I just want to see how long it has to be. Because hey, oh, I said falling wedge. We need a rising wedge. Dang it. Rising wedge. Rising wedge. There we go. Rising wedge. All right, so we need 3 weeks is the minimum duration. Otherwise, it's a pennant. Guys, what did we just see? I think we saw 21 trading days since it started on this day. Plus we have weekends. There'll be 3 times 2. There we go. So we have 27 days. Yeah, we have almost 4 weeks on this pennant, or not this pennant, on this rising wedge here. And I understand the lines are not matching up. I don't know how to fix that, but it does that on some charts and not others, like the VIX. Look at it. All right, it's very well defined on the hourly chart, and then we come over here to the daily chart. It's still well defined on the daily chart. Why is it not that way on the SPY? I have no idea, but we're just gonna move on. Who cares? But yeah, okay. You know what we're actually gonna do? We're gonna pull that back up. We're gonna pull up the pattern site. We're gonna come over here. Rising wedge, and we are going to put a price target on the board for this rising wedge because we do have one for the VIX. And I mean, hey guys, I mean, we might as well be as exact as possible while being as conservative as possible. So yeah, let's here. All right, we're gonna X out that. All right, so we X'd out that. Coming over here, and I believe it's just literally AB times percentage, meaning price target, equals your target, price target. For downward breakouts, the lowest valley in the pattern A is the price target. Alternatively, compute the height from the highest peak B to the lowest valley A, and then multiply it by the above percentage, meaning price target. So we have this is our price target. That is price target number 1. Price targets are our yellow lines, and we make them thick. Yes, like them thick here on the channel. What do we make it for VIX? This is 4 pixels. All right, 4 pixels. It's our first target. Okay, our second target, we're going to have to measure here up to there. That is 56. We'll call it 56. Like I said, be conservative as possible. That is how you are most likely going to be winning. All right. If you want to risk it for the biscuit, but you're probably not going to be winning in the long run doing that. Percentage meaning price target for up down. And guys, when I say risk, like, dude, all of this is risky. We have to risk money. You have to risk money to make money. You literally can't do it any other way besides trading your physical labor for money. All right, you have to leverage something, and I choose to have my money leveraged. All right, I don't just mean in options. I mean just anything, like anything that creates money, wealth, income, leverage besides your job. All right, physical labor, yeah, that's that. But like you have leverage, you have people, business owners. Okay, they leverage people, other people's time. Okay, you can leverage other people's money. There's 3 types of leverage: other people's time, other people's money, and then your money. All right, and actually, I think I got that last one wrong. And I got this from, if I'm remembering correctly, from Rich Dad Poor Dad. I don't remember which book it was. Maybe it was Cash Flow Quadrants. I don't know. Maybe that was the book that told you, hey, how to get to there. Great books, by the way. I completely agree. And at the time, I was a complete beginner to all of this whole money thing, making money thing. But no. My plans now perfectly align with exactly what Rich Dad has laid out across. I think it was 4 books, and I do think Cash Flow Quadrant was by far the most important one, and then the next one I think was the tax one. And that one was very interesting. All right, if you're going into real estate, that will give you some tricks and stuff like that. It'll give you a bunch of just useful tax information, just tricks pretty much, just to keep with you as you go. But yeah, the cash flow quadrant one, yeah, that'll literally teach you like, hey, like, do you want to be stuck? Which quadrant do you want to be in? And then what do you have to do to be in these quadrants? All right, and that's exactly how it is. You need the leverage to be in the 2 right quadrants. All right, there's the, let me see if I remember these right. We have the individual, not the individual, but we'll just call him the worker. Okay, we'll call him the worker. You have the worker, you have the individual, you have the business owner, self-employed. Okay, so it's the no, not I is the 4th quadrant. But we have the first quadrant. Shit, we'll just say it's B. No, it's not B because that's the 3rd quadrant. Okay, it's civilian. We'll call it C. No, yeah, we'll call it C. Okay, we'll call it C. Civilian. That's number 1. You're working. Okay, you are working for someone else, making your money. Quadrant number 2, below the first one in the left corner. So now you are in the left corner. Quadrant number 2, that is what is it? Why am I having a brain fart? That is self-employed. So that is the S quadrant. 3rd quadrant is B quadrant. That is business. Okay, and that is your C quadrant as well, your corporation. And then you have the I quadrant, which is investor. And that is how you beat everything. Okay, that is the highest quadrant. And that's what I'm trying to get. That's why I'm not even going the business route, guys. There's no reason, because once you get to the I quadrant, you don't have to do shit. Okay, you do what you have, the result that these other people had to build these businesses for and climb the ranks for. And it's just like, no, you just literally build up your own skill set here. That's all it is. All right, so getting back to the analysis, I got off topic there, but Rich Dad quadrant. I just want to know. All right, so I guess it was E. And what does E mean? I just want to know. All right, what was it? E employees. Dang it, I got it so wrong. I called it civilian. I called it civilian. This is what I was saying. Like, if you want to be on this side, you need this. People work for you, or money work for you. That's what I was saying. That book shows you. Like, hey, if you want to be on this side where you like literally will have leverage working for you, you have leverage making you money, and you will be trading, your money for time from that point. That's the point when you have that opportunity to do so. Over here, you're trading your time for money. And yeah, I mean, you don't want to be stuck in there. Like, it's the purpose of the channel. We're all trying to get to that I quadrant where we can, like, hey guys, we're wealthy as shit. Like, guaranteed, like, our families are sustained for the rest of their lives and their kids' lives. And there you go. That's the I quadrant. You are like good. You don't have to do anything else. You didn't have to create any businesses. You can if you want. Everything is just, it is literally you trying to either go after your purpose or trying to have a good time after that point. Okay, it's philanthropy, or you're traveling the world. All right, that's what it is in the I quadrant. That's the only quadrant I want to be in. All right, so yeah. So we do have this rising wedge. We have a price target of there on the board, and then we'll come back over here. What is our percentage meeting? Price target is 63% for up breakouts, down breakouts 32%. So we will do 32%, and I guess we'll put an upper price target on the map. I don't want to, but we will, because if it does break up, hey, this zone is probably where that target's going to be. And that's something that, like, hey guys, we're not emotional here on the channel. We are literally the most logical channel here on YouTube, in my personal opinion, that talks about the market. We are the most logical channel. We are not doing things with emotions. Yes, now what I will say is I do bring my trading into what we talk about here on the channel. So that can be a way of bringing emotions into it, an opinion into it, a bias. But I think I do a pretty damn good job at just trying to expose myself to the other side. Just like I'm doing right here. Like, hey, if we break this, that is on the table. That's what this price target is telling me. And so I do believe I do a very good job at pretty much not like I may be biased deep down, all right, but I do a good job of putting all the facts on the table and trying not to ignore a factor. And if a factor's there, I'm gonna find the probability of this factor. Like this factor, the upper price target here of the rising wedge here on the SPY, this factor is like, hey, if you cross this line, the probability is that you are going to be reaching your price target. All right, that's the point of this average percentage being price target here. He explains it in his books. These actually like don't represent anything else other than like all of his tests. This is the average. This is literally where that move ended. All right, so and it was a clean breakout. That's why I recommend the patternsite.com. Bolkowski is the only tool that someone really should be using if they want to learn TA. Like, yeah, go find yourself a mentor like I did. All right. And it doesn't have to, don't ask him. I mean, not don't ask him. If there's someone in person that you know, go ask him. But like in reality, the people you want to get to, if you're like me, okay, I just told you I want to go from E to the I quadrant. That's skipping over 2 fucking quadrants. That's like, you guaranteed aren't knowing people in the I quadrant, because if you did know people in the I quadrant, you spent your time with these people, you would be in the I quadrant. All right, there's no, like, that's how it works. All right, five people, the 5 people you spend the most time with, that's who you are. And it is, dude. It literally is. I am serious on that one. I have seen it firsthand in my life. All right, and like I feel the most like me I have in a very long time. And it's because I don't really see a lot of people. It's pretty much just me and my dogs have been spending my time with, and then my fam, and then my YouTube. And yeah, as you see, like we try and take emotions out of the equation here, and hey, that works as a positive factor in my life as well. But yeah, let's finally put this price target on the map. We have 32% for the downward breakout. We'll do a rough estimate there. We'll say right there. So 50, we'll round down again, even more conservative. I told you guys, conservative is the way to go if you want to stay in the game. And I am speaking on staying in the game now for only a few months. All right. Like I told you guys over the past year, I've wiped myself out several times. And actually over the past 2 years, even when I was before this bear market started, no, I was still like just fucking up because I was, bad trade management, bad risk management practices, like terrible. It's going to take you out the game eventually, and that's what just kept happening until like recently I've not had that happen. My accounts have just kept going up, and I strongly believe like I'm talking like I 90, we'll say, yeah, 90% attribute all of my recent success to risk management. All right, if it wasn't there, then yeah, I don't think I would have kept a lot of the money I made on this move. All right, I really don't. All right, and not even this move, I just don't think I would have kept, like, if I was going all in, like, for a while. This was, yeah, like a lot of them I was just going very heavy in, and that's what like a lot of people with small accounts will do. And I can tell you from experience, from going from a small account to like a slightly bigger small account, on all of my accounts, they all did this. It was just literally patience. Less trading was better, and just literally sitting there waiting for the entries. Like it was like, hey, less risk in the end, like taking the profits off the table. Like I told you guys, I didn't let a lot of runners just run. Like I remember I had one over here that just extremely pissed me off. It was up so much from the entry, up like 500 something. It was crazy, and I was so pissed about it. That's when I realized, okay, I'm not going to keep money that way. It's not going to happen. All right. So that's why I highly do recommend. Okay, like I'm not a financial advisor, of course. Obviously, you guys know how much money I'm playing with. Okay, like it's not a lot. All right, I've grown from honestly, like my accounts have hit like lows of a few $100. All right, I told you guys, like the only thing that's going to give me money here is, hey, if I finally get it right. Okay, and I do think over the past 1 to 2 months I have finally been getting it right. All right, and I'm just gonna keep rocking with it. We're gonna keep improving here on the channel, but yeah, we're not gonna fix something that ain't broken. And yeah, all right, we're gonna keep learning. That's pretty much it. We're gonna keep improving here on the channel. All right, but yeah, okay, so we can go calculator. Okay, and that was just a little thing I told you guys I was trying to avoid getting off topic. Okay, that risk management, yeah, it's risk management, but hey, that does not have to do with TA. That's what makes the videos longer. And yeah, okay, so we had 55 times 0.32. And that gives us, we'll round down again, conservative 17. Okay, so that's our downward breakout. Let's say we break out all the way up here. Again, most you wanna make it conservative. Okay, so I guess it would make but it doesn't make sense that it would come up here. But you know what? Again, conservative. We're gonna do it. Okay, and yeah, that would bring us right down to the gap fill. All right. So it is 32%, and we got. Why did I delete the calculator? Calculator. 55 times 0.32. 17. Yeah, it's just literally there. So I'm gonna make this gap fill. That it's actually going to turn into our first target right here. This gap fill is definitely our first target. We're gonna turn that view. Gonna do it like that. This one actually a little distracting. Just a little distracting. We will take it back a notch. Just put it on 2 right there. What's the lowest it goes? It just goes to 1. One look like that's just normal. Yeah, I'll make price targets. We'll put them on 2 thickness, or gaps we'll keep on 1. Everything else we'll keep on 1. Besides our targets. All right, in QQQ, let's apply that right now. Fix up the chart. You always want to clean up your charts as you go, you know. But yeah, so we did do that one, and now we got to do the upward one, which is 55 times, I think it was 60 something. 55 times 63 times 0.63. All right, so 34, round down, conservative. Let's say you break out here. All right, because hey, if something's gonna happen, yeah, I don't want to see it, but yeah, I mean, hey, I'm not gonna deny it. That's what I'm saying. Like, I don't want to see these things play out. All right, but at the same time, if they do, yeah, that's what's on the table. Okay, there are price targets, patterns form, is because they continuously form throughout history, and they lead to something. Okay, they all lead to something. They're very similar, which means we could apply the same thing to each one of these occurrences, and we'll get a pretty close estimate. And I actually completely forgot what the number there was. Off the top of my head, 55 times 63. Just a guess, what would that be, like 35 to, yeah, 35 to 38 times 0.63. 34, 6. I'm pretty good at mental math. I will pat myself on the back there. $34 we're going up. 34. Holy shit, dude. Dude, it's just a zone. Damn it, dude. Like, guys, guys. I'm serious. It's too good. My TA is too. No, it's not too good. You never could be too good because it just gets perfect eventually. But it's so solid, guys. It's so solid, guys. This price target is the start of here. It's literally the start of here. So that's what we're gonna make it. Like, these are our price targets. All right. If you break out from here. All right, and we'll make our patterns. We'll make them in orange. All right, I told you guys I was making the hourly stuff orange. All right, but we will just say we'll make patterns orange. Yeah, it will not be a specific color code for different time frames. But yeah, okay, that is what we got on the board, and hopefully, like, honestly, guys, yeah, hopefully this doesn't happen, because we have seen what has been happening on the daily time frame, which I warned you guys about. Hey, once these oscillators match up, the weekly and the daily time frame, and they did, okay? Like, we could literally go back to them. Back when you made this bottom here, I bet this bottom is very close to the daily bottom that formed. It's actually the day of the daily bottom that you formed that weekly divergence. Well, that does make sense. No, it doesn't. It's whatever. I don't care. Yeah. 18 minutes in, we are almost done with the analysis, guys. Don't you worry, okay? So we went over the hourly chart, went over the swelling wedge, which honestly, that is really the main show. Like, it's something to keep in mind. And what I do also want you guys to keep in mind is, I think it's on the QQ I got it showing. And I know this looks like a bunch of nonsense, right? All right, let's just take away that. We're gonna keep that because that is something we got going on. And then this orange line right here, we're gonna take out. Now we're gonna keep this here. We're gonna keep it here. We're gonna extend it. All right, we're gonna extend it, and I want to see what happens with this trend line, okay? Because when you break this trend line, first, all right, on the hourly time frame, all right, and I understand it looks sloppy, but just follow my cursor, all right? Because if I can very easily manage this, you guys can because this makes perfect sense to me, all right? This does not look. I clearly understand same colors, but they all mean something. So this right here, we got a channel going on the QQQ. we're at the top of the channel. What happens with channels? What did if you reach the top, like you're either getting rejected or you're breaking out. All right, if you break out, it's probably going to be meaningful. And to break out from there, if we are going to do that, you're going to do something like that, and it's going to bring you right up here to this gap fill. Or not, no, it's not gap fill, okay? Is it a gap fill? Oh, it is a gap fill. Yes, all the green ones, I guess, are gap. Yes, okay. Glad I stuck with that. Yeah, guys, TA is so weird. So that's how Bulkowski would have measured it there. A breakout, and yeah, dude, this literally, that's crazy to me. That literally brings you directly to that gap fill line if you do break out right here. That would be a breakout just the next, like, 2 days, all right? But yeah, you got this channel right here on the QQ, and you have what we called out as a head and shoulders here, and I called it out when we were right here. All right, so we were right there. I said all that we were waiting on was for the right shoulder to form. I was saying I was expecting a bounce here, which we definitely got. Like, guys, if you're even the scalping just off of these, like, just that's what I'm saying this channel is. It's not me giving like straight up projections. It's like saying, hey, if this, then that. And it's been working out, right? Like, that's how I make sure, like, I'm never wrong, because, like, hey, I included all the possibilities on the tables, guys. They are, all right? And I'm very vocal about what I believe these probabilities to be, all right? But yeah, the probability was you were going to bounce here. And now, even though this thing definitely extended here on the shoulder, all right, I still would not be surprised if you hit it with a double top right here. If we draw a line here, you guys can see it. Right here, you have a clear as day double top. If we zoom into the 15-minute chart, we probably can see that very clearly. Right here, clear as day. That is where you're finding your resistance. But at the same time, they rallied it right into the end of the day. So maybe this is planned. Okay, maybe this is planned. So they could just carry it with momentum going into Monday. All right, because, like, hey, say it hit it earlier in the day, it would have given sellers a chance to jump on it. But, like, why is it going to sell off right at the end of the day? No, that's usually this power hour, right? That's when, like, hey, momentum is one way, it's really going to be one way. All right, so maybe that's what they're trying to do here, and they're trying to break it that way. All right, they knew sellers were lurking. Maybe they're still in the process of squeezing. All right, when that is done, guys, we're going to get a dump. All right, and then after that, we're going to get a mega rip. All right, but, like, they have to be done squeezing. If they're not, like, done squeezing the shorts, then yeah, guys, I'm sorry, but, like, more pain's gonna be ahead. But yeah, as long as you're applying this, like, this calm mindset that we've been vocal about on the channel here, yeah, I mean, the worries are not on the table. All right, we have September 21st contracts. Like, there's no way this is a bad entry on the VIX. All right, I'm just saying, like, it's not just because it's so low. That's not at all why we're in the VIX. Like, just because the VIX is at these levels is not why we're buying. We're buying because of TA, okay? There are probabilities that we're going to be bouncing at certain spots. And, like, there's only one other spot under here, and it's only $2 down. The contracts are not going to go down much further, all right? Like, I'm just saying. But what I also did say is that when you broke this trend line, it's probably going to lead, and it was a long-term trend line because we broke this short-term trend line. I said once we broke this, that 200 MA would be hit, and if we break that, we're coming down to the long-term trend line because there was no support in between there. All right, and that's what happens with trend lines, and that is what we're going to talk about right here. What is going to be happening when QQQ breaks this trend line? All right, what is I mean, is it going to break it? I don't know. Okay, let's just clean up the chart right here. We'll make this different color just so everyone is not super confused here. Make it blue. All right. Oh, I made you a different blue. That is messy. There we go. Okay. I mean, I guess this chart is kind of messy. Take away the 200. Actually, I noticed something. I forgot which one I noticed the 200 on, but it was one of these. And maybe it was actually this one. Yeah, it was probably this one. Or was it the VIX? The VIX. Yeah, we kept getting rejected the 200 on the hourly time frame. Look what happens. Oh, that was a voice crack and a half. Look what happens when you finally break the 200 MA. All right, and, like, look what happens when they manage to bring it all the way back down to these levels. All right, when, like, the price from its support is, like, right here at the MA, like, support MA, support MA. Look what happens. It explodes. Once you get over it, it explodes. Here it was pretty far away from the 200 MA. All right, it still had a decent sized push right there, and honestly, that would still be Yeah, that would probably still be enough to trigger our profits. We went up 30% from right here. All right. All right. You know what? Going up from the bottom, 30%. Right. Yeah, dude, that would probably trigger our profits. We'd probably be taking profits on half of them because automatically, guys, if you hit that 100%, you're taking half. Well, I'm taking half the profits. You're riding the rest for free. Trade management. All right. That's just what it is. All right. Um, but yeah. All right. You know what? I've been saying trade management, risk management. I'm just gonna say one, and it's just gonna be trade management. Okay, it's not gonna be risk management. I feel like a lot of people would just get frustrated at that. I feel like before I really learned what that was, I was getting frustrated because so many channels just said risk management. Well, what the fuck is risk management? You got to tell me what it is. Not like, oh, you don't want to lose money, don't risk more money. Like, what the fuck is that risk? That's not how you explain risk management to someone. So yeah, I'm never going to give you guys a straight up definition of risk management, but I will continuously give my 2 cents as we go on how I'm applying risk management. And over time, you guys will also be able to, develop that skill. And I'm not even saying my skill set isn't fully developed. It's not even close to being fully developed. 10,000 hours to become a master or something. Guys, I'm 22. I plan on easily doing this thing at 30. All right, I will be a master by then. And I'm just saying, I'm 2 out of 10 years into that journey. Guaranteed. I'm very, very in the beginning stages of this thing. But yeah, guys, we have been rejected by the 200 MA. And we bounced off of here. Like, this is important, guys. The 200 MA is important. You came down, you retested there. But yeah, you got rejected once, twice, 3, 4, 5, 6. I don't know if we want to call that 7. We'll call it 7 because you got pretty close there. You didn't touch it, but you got pretty damn close there. And that's just like, hey, it like a level is important. It doesn't have to touch the level necessarily, but if it's an important level, you're gonna have sellers or buyers waiting there, ready to pounce. All right, and like the reason gap fills are so like important is because like, hey, when a upper gap fills, that's like when longs get out of their positions. That's when like that's your first target right there. That's what we do with these targets, right? That's your first target. Like that's why we're gonna be taking out here. Like there's probably gonna be a bounce here. Probability suggests there will be a bounce. Bash called it an 80% probability. I have no way of knowing if it's an 80% probability. I can tell you from what I've experienced. Yeah, gaps have a very high probability of filling on the indices and reversing when that happens. Right, the filling, pretty much 100% probability that you are going to fill all gaps on the indices, but it's definitely a 100% chance on the VIX. Go back and look at the history, probably because it just hangs out down here and it never moves. Like SPY, like it continuously goes up. So like some gaps you won't fill, but most gaps, yeah, you will be filling, especially the gap downs you will be filling. All right, like let's look at, we got one right here, 400. Well, like yeah, it took like over a year to come back and fill that. You had a gap right there. All right, yeah, look how long this took to fill. Like let's see how many trading days that took to fill. If you're just sitting there buying shorts because you thought it was gonna fill, like dude, no, you would have been completely fucked. Like no, that's why we trade with the big picture. It's not just like, oh, if this happens, that's how it is. No, it's like all these factors are a part of the trade. All right. Yeah, like that is a very long time. They don't have to fill the gap ups. Now the gap downs, they will most likely fill rather quickly. All right, we are in a bear market where I think we're going to have a lot of price action in this range. All right, this big ass there to here. I think this is going to be the range, the 2022 to 2023 range. This is our range. All right, just know like this is the range you want to be going short, and this is where you want to be going long. And no one's saying we can't make new lows. We likely will be making new lows at some point, but who says we don't push into new highs? And that drop seems more dramatic than it actually could have been if we dropped from right here, say, because hey, the dealers control the markets. They make money off of people's emotions. They have to cause these emotions, so that's how it's going to be done. All right, so we pretty much covered everything. Go watch Friday's video if you want to, which was the last one. If you want to watch the daily chart analysis, we did a little weekly analysis on there as well. I pointed out that on Webull, we are literally in the oversold territory. We're where we were at all-time highs on, I think it was QQQ. So let's pull up QQQ real quick. And these oscillators are different from mine. All right, mine over there. And let's take off the MACD. The MACD sucks. All right, MACD. My personal opinion. Maybe it doesn't suck. I don't know. don't know. I don't really care. This is such a weird looking, definitely a weird looking stochastic, dude. Why is there this big bar? Why is it doing this? This looks so weird. Um, like take that off. Yeah, what is causing this thing to look the way it is? What is causing this? Dude, why did they... Dude, Weeble has ruined it. I can't even look at this thing. Take it off. Take it off. Wait, put it back on. I was making a point. I was definitely trying to make a point. Put it back on just for a sec, okay? Look where we are. Monthly fucking time frame. Monthly time frame, guys. Getting your cross. Getting your cross. We had the bullish engulfing candle. We already talked about in detail that video. We went back in history, into the history of the QQQ, and we saw like where were the last few bullish engulfing candles? What do they represent? They represented a bottom. All right, we had one right here, represented a bottom. All right, I'm sure we could find them if we looked. We're not gonna. All right, but yeah, right here, bottom. All right, go look at the SPY. SPY has more history than the QQQ. Go look at anything, any of the indices. Go look back on them. These are extremes. Okay, these are extremes that don't get hit a lot. Okay, and when they do get hit, they're likely going to mean bottom. All right, just like when they get hit up here, they don't have to mean top, because what I've said in previous videos, like the market's controlled by bulls. Like overall, you will lose, guaranteed. You just keep shorting the market. All right, if that is your bias every year, moving forward, and every month, every year, every day throughout the months, yeah, you're screwed, dude. You're not gonna be making. I mean, who says, all right? If you like learn how to take all these bearish setup trades, you got to become a day trader to do so. But yeah, you're gonna get fucked most of the time unless you learn how to trade in a bullish manner. But then again, most people don't know how to short, and they only try going long, which is what I was trying to do, and pretty much just kept getting wrecked this whole time right here. Not this whole time, but the starting period was definitely rough. Definitely rough for your boy Henry here. But yeah, what I want to point out is actually on the weekly time frame here, and we are at levels that we were at last when we were right at all-time highs, literally at all-time highs. We were here at there, and then we formed this bullish divergence here. We can pull it up here. Got that right there, or not bullish, bearish divergence on your weekly time frame. I guess we can't do it here in the on your CCI. We can't draw on it. That sucks. This is why Weeble sucks and trading views great. Okay, and also by the way, guys, they had their yearly sale, and I just bought a year, even though mine wasn't up, and they'll just add it. They'll add whatever existing time you have to the plan you just bought. And I bought the year because it was only $80, and the last time I paid for a year it was like $150. So yeah, or it was $89.60, I believe. So yeah, go check that out. I don't have a link or anything. It's just like, hey guys, okay, if you enjoy my charting here on the channel, then I assume you like the appeal of TradingView rather to something like Weeble. Like Weeble, this doesn't look good. To me, it doesn't. All right. But yeah, look at the weekly time frame. Look where you are on stochastic. Look where you like this represents your overbought territory on your stochastic right here. I don't know why they make it look so weird with this background filled in. They should just have one line here, just like they have here, just like they have here. But yeah, guys, check it out. Like you're right here. I mentioned in Friday's video that what I am looking for, but I'm not expecting it. But it is what I'm looking for, because I don't think we are going to have. I don't think this is going to come down and make a new leg. I think no, we're gonna come down here. We're probably gonna find support somewhere in this range here, like anywhere from. I think we have gap fill here on QQQ. We have the same one on SPY, but I think the range that we'll be going in is going to be this gap fill here, right here. I think this is where we will be likely falling to. Okay. Then I think we're going to be reversing. Like I said, I don't think it's going to be this massive downfall, and that's why I'm playing the VIX. The VIX looks like it will explode. So even if we don't get a big move down on the indices, I still think we're going to have like 2 or 3 days that are going to be looking like this, and we're going to have some time to sell to the people who are FOMO buying. All right, and yeah, trade is taking a while, but hey guys, it will be worth it when we do get to sell to the FOMO buyers. It's going to be very exciting. But yeah, guys, like. Yeah, I mean, I don't really know what else to say. Like, I could show you guys the charts all I want. I've been saying it. And I did say in Friday's video, so anybody who watched that, you already do know what I'm about to say. Like, there could be a divergence that forms here on the weekly chart, and you could have something that you make your higher high here, you come down, you go like that, and you have a diversion, you come down, and but either way, this weekly oscillator, it needs to come back down. Look what happens when you do get into this region. I mean, it comes back down, but what I want everyone to be careful about, okay, is this bearish divergence. All right, maybe it takes like this amount of time. Like, look at this. This was like a big difference here from going from 355 at a high here to 379 there, and that was like this on the weekly time frame. That's like what, like, we'll just say 5 to 8 weeks. Like, it could take some time like that. Okay, so you could see, like, it could be frustrating. All right, so I'm pretty much telling you guys, hey guys, don't let this market frustrate you. Like, just stay calm, cool, collected. Stick with the data contracts, just so you don't like have the dealers messing with you. Like, straight up, the August 31st contracts, guys, they got messed with. All right, straight up, that was the dealers are squeezing. All right, they're literally trying to get people with these contracts, the short dated I mean, pretty much any contracts. If you go the opposite direction, yeah, you're gonna be down money. All right, but if you got time, like on something like the VIX, no, dude, I see how they move. They don't. It's not like buying the indices with even the same amount of time. All right, like they're pretty nice. They hold their value. But definitely the September more than the August ones. The August ones, like, that's what I was saying. That's why I switched over so early after like the first buy in the August ones. I was like, hey guys, next one I'm doing September, and after that one, I stopped buying August completely and only started buying September contracts because, hey, those are the ones that I knew probably weren't going to be dying, and I'm going to be catching this move. Like, this move looks like it's going to be a sick, nasty move up. All right, and there's no point in missing it. And I've been having the time in my life just like not being distracted by the market all day. I've been able to just, I don't know, have a life. And I've also, dogs, they're so fun. So fun, so cute, so lovable, so amazing. All right, they're amazing. But yeah, this form of analysis has honestly changed things for me. And I hope it is doing the same thing to you guys. I just have to look at charts in detail for, let's say, anywhere from 10 minutes to 2 hours a day, because sometimes I re-record these videos. I don't really spend too much time editing. I just slap the music in there, lower the audio on it, and yeah, yeah, that's my edits, and I post it. But yeah, I mean, this looks like it's gonna be a sick, nasty move, and like I was saying, like, Webull is way different than what's it called, than TradingView here. And as you see, like, your CCI is not even close to this oversold region here. Got 50 points to go there. Your stochastic is, though, and what I want to point out is VIX. That is what I wanted to just point out right here. All right, like, I've been pointing this out. Like, you were trying to cross the week before too, and you didn't. You had another bearish week, and I said if we closed bearish, this was going to represent another, because we had 1, 2, 3, 1, 2, 3. No, if we have another one now. So 1, 2, 3, 1, 2, 3. Yeah, so if we have one more bearish week on the VIX, then you have another three black crows pattern forming, and that would signal another bearish week on the VIX. So just be aware that can happen, but I do think it makes sense that the dealers, or whoever controls the market in general, just does not let that pattern form, this candlestick pattern, 3 black crows here. Which is literally just like you need 3 red candles next to each other, all opening in each other's bodies and then closing outside of each other's bodies. And it creates that 3 black crows. And yeah, I mean, I think it makes sense that we have our first bullish week on the VIX. I do. I think we are to the point where, I mean, yeah, on the weekly time frame, it looks like we could keep pushing. But I mean, we've been talking about it. You're getting all these bearish divergences. You're coming up to these levels right here. You break this level, there's a chance you come up to this level. You got the 200 MA right here at this level. So, like, if you hit this level, you're probably going to hit this level, bust through this level, go test the 200 MA. All right, maybe they give it like an hour or two and that you're above the 200 MA. But by the end of the day, they flush it under the 200 MA, because any FOMO buyers, because they're like, oh, 200 MA, great buying opportunity. False, terrible buying opportunity. But yeah, I mean, yeah, it signals trend change, bear market, bull market, the 200 MA on the indices. But like, no, it's probably gonna, like, even if it gets above, it's probably gonna just struggle here and then come back down and then break and retest it and do all this crap with it and but yeah, I'm just saying what makes sense to happen going into Monday, honestly, the next trading session or the next two. I think you're gonna break this level here. I think you're gonna come test this 200 MA, and I think you're gonna reject off, and you're gonna come down. Now, if you do end up closing above it, I think makes sense. Okay, I do think it makes sense that this will act as your resistance. Your QQQ 200 MA will act as your resistance, and then in this day, maybe over the next few days, I didn't mean to say this day, maybe over the next few days, if SPY, it really depends. What are we going to see on SPY? We're going to see it come over up and test the 200 MA, because we did get rejected up here off the 200 MA. All right, and as you see on QQQ, we literally got rejected right here. This what like caused that sell off with the oscillators. Looking how they are currently. All right, like I'm just saying, like factors are suggesting that you are going to be selling off instead of continuing, but there is the chance that you keep continuing. And in the chance that you continue past this on the SPY and you close above the 200 in May, I would suspect that the QQQ is then going to be the indice that is acting as, which is the NASDAQ, which is acting as your next resistance point, which is going to be this 200 MA or this gap fill line. All right. And in this case, I don't know if this gap will be filled. Okay. We've been teased a few times of gaps getting filled. Like right back here, we had a tease. Over here, we had a tease. Look at that. Came right up to it and came back down. Did not get the gap fill. There are like a lot of teases. So who says that we don't fill this and we just reverse off of the 200? But also another possibility is you come up to the 200 MA and do the same thing I was saying with the SPY. Here, you break one level, test the other, test the like so in this case you would break the 200 MA and you have a wick coming up to fill this gap, and then you reverse down off the gap fill. All right, like again, one of these spots is going to be a reversal point. All right, so they're important to have on your charts. But yeah, guys, that's pretty much it. We covered the monthly time frames. We know what's happening with that. Cover the weekly time frames. We covered the daily. The weekly, by the way, this candlestick right here, we do have a what I believe to be a either hammer or a hanging man candlestick, which both have bullish continuation as their tested performance. All right, theoretical performance of a hangman candle is the bearish reversal. I have seen it bullishly continue more than bearishly reversal. All right, so I'm just saying I would be going with my experience on that, but also it is slightly above random for Bulkowski saying that it will be continuing upwards. So just saying, weekly candlesticks is suggesting further upward movement. Monthly candlestick is suggesting that this is going to close green. All right. So I mean, for this monthly candle right here to make sense, we just have to close above here, above this candlestick, above this wick here, and it would be, yeah, 316. That still gives you a ways to go. So who says we don't fall back down here, fill this gap? Maybe we reverse off the gap. I don't know. But who says we don't fall down? Maybe we come down here. Maybe we fill the gap, and it's just one massive wick here. And it looks like this. It wouldn't look like that. It would look like one big ass wick. Maybe it turns into that. And then maybe it's a hammer. And then it signals that is the monthly chart. That would be, oh, this is the monthly. Okay. I thought I was on the wrong time frame. I don't know. All right. So maybe it does look like that. And you do still end up closing somewhere above this. And that would validate this candle right here. And I actually do believe that signals further bullish continuation there after the confirmation candle. But yeah, I'm just putting possibilities on the board. What could be taking place? You could continue off this, all right, or maybe because we have 2 weeks left in August, right? So this would be the start of your month right here, all right. Or I mean, it would be right after this would be the starting month right here. So we have a few weeks till that. So who says we don't do something like this? We come down, we maybe fill a gap, and then we come up for that. And since these 2 months, like our monthly candles closing in between these two, so I guess we could say it right here. So who says, yeah, we don't quickly come down just like we did over here, just like we did literally right here, come down right here, right back up. Okay, right back up. And I mean, I know it took a little while here, but I do believe, I mean, there's a reason to be bullish in the market. I just am looking for the entry. All right, so I do believe it's going to be a quicker climb than we had here, whereas you stalled here and you just consolidated until you broke this range. I don't think it's going to be like that. I think it's going to be a quick drop and then bounce up. So that's what I'm watching for. That's what I'm waiting for. I'm patiently waiting. Those are all the possibilities on the board. There's not really anything that we didn't cover here. Yeah, you had CPI. It was that's bullish in my opinion. You finally had your inflection point downward, but just remember, a lot of people are going to jump on this, and they're gonna be like, "Oh, like, hey, there's no reason to go down anymore." But at the same time, dealers make their money from taking money from other people. So, yeah, this could be a very cool trick here that the dealers are gonna be playing on people who are FOMO buying up here off of that news, and then yeah, they drop it, and then like a week or two goes by after they dropped it, they drain those people's money, they made them sell, and they send it up, and then the people who sold, they're like, oh motherfucker, dude, I literally like this is what I was doing, and I messed up my entry. But yeah, then they're gonna frustrate those people. So like yeah, dealers are probably gonna win, guys, and I mean, dealers in the end, dealers are always going to win. That's what happens with the market. That's why the market keeps functioning. Why the big money keeps growing. It's because dealers always win, and like big money always wins. That's how it works. All right. But yeah, that's pretty much it. I'll catch you guys next video. Long ass video today, 45 minutes. But I will say, holy shit, were we detailed? And before we leave, I will comment on how I have not been covering Bitcoin, and that's just because I don't think it really matters. I really don't. This trend line is still showing to be it's still showing to be strong resistance here. Like this is literally where you have wicked every single time, and we created this off of touching that to that and just extending it. All right, this literally all was. It was that to that. I think we formed it on this candlestick right here. We put it to the body. Ever since then, yeah, dude, this is guaranteed a trend line that is being so heavily respected by Bitcoin. How many wicks we got? We got 1 wick, 2 wick, 3 wicks, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 wicks touching this trend line. What the fuck, dude? What the fuck? That's crazy. All right, and we barely have them down here. So if you're seeing all this selling pressure up here and not too much buying pressure down here, I mean, yeah, you had the buying pressure that sent you up here. So don't forget about that. But yeah, like what is this indicative of? You're probably going to be moving down. You have so much selling pressure lurking on this upper trend line. This is literally where sellers are popping in. 13 instances of this is where sellers are stepping in. You're unlikely to break it, okay? But what I will also say is you keep coming up to it, which is that's showing that, hey, bulls are still in the equation. They're still here, but that does also tell me that, hey, the dealers also win all the time. Okay, like very few times when the dealers get squeezed. Okay, but it does happen. It has happened in this market as well. I'll point to it in a different video. I want to end this video before 50 minutes. Yeah, I was shooting for a very quick video here, but yeah, no, it's very long. But yeah, it's definitely a very detailed video. But yeah, it's very unlikely that you are going to be breaking this. But if you do have a close above this trend line here, yeah, I suspect it. It's going to be explosive. It's going to be crazy. All right, like you're going to be stepping in, but what I want to point out is boom bop bing boop pow. Look at that decline in volume, but you were steadily moving up here. All right, then let's just zoom out. Okay, you had your big move here. Okay, the big move ended. You ended your bearish action right here. Okay, right here on this day, we're gonna mark it with this green thing right there. All right, so right here. That's when your volume was the highest, and then it dropped off since then, every single day. It just kept dropping off. Like, this is not... Like, look, you can clearly tell who's in control just by looking at the volume. All right, sellers, you're going down now, higher volume. All right, you're going up. Oh, higher volume. So now bulls are stepping back in. You got the sellers. Got the rising volume here. Okay, then you have this going up. So buyers are stepping in. Look, not much momentum behind it. Okay, there's not much pushing it. All right, and now look at that. You're going down. You're going down. So that means, okay, all right, bears aren't as strong. They're not as strong. I'm just pointing out, like, hey, volume tells a story. All right, right here, you're pushing up here. Look at this. You had 2 volume spike days right there. Bulls are stepping in, but look what happened. Bears stepped in at our trend line there. All right, and now what do you have here? Okay, you have this consolidation here, where you have just you have this stale pattern going on where you're not going anywhere. All right, volume's just like it's stagnant. All right, and in the end, yeah, it's coming down from where you started. All right, so I still believe they're going to squeeze the buyers. Okay, I think they're going to squeeze the buyers to the downside here on BTC. I think that is exactly what we just went over, this volume trend we just had, along with this trend line. All right, had the fact that the sellers just keep stepping in. 13 times they stepped in. All right, 13. That's a lot. All right, that's a lot of times. So I'm just saying, like, it shows that the buyers are still trying to step in, because some of these pushes here, they had volume spikes. Right here, you had these 2 days, you had your volume spikes, and these were your 2 big green days here. So clearly buyers are still here. All right, they're still here. But I think that's what's making up this consolidation. Well, it's definitely what's making up this consolidation pattern, the fight that's going on. I don't just think it's one side controlling it here, which is pretty cool, because that's usually what I would see in the market on the indices. No, it's the dealers controlling the price action. They're painting this pattern. They're trying to take people's money. Whereas Bitcoin, no, dude, this literally is a battle between the bears and the bulls constantly. This is what you got. This is strong, dude. This is a strong, like, look, the dealers just fuck the sellers. All right, they were just, no, screw you. We're breaking out of this bitch. All right, like that was just that's just how it was going. All right, same with SPY here, breaking out. Bitcoin, no, dude, you have sellers, like, it's a continuous battle here. The dealers were not able. I don't even know if there's dealers here on Bitcoin, but, like, you know, it literally does represent the buying and selling battle. All right. But yeah, I'm just saying, factors are suggesting that you are going to be heading down. I mean, it doesn't look like you're going to be breaking down. It's not like you have this crazy volume, but if you do have that breakout, just look for a crazy volume spike. If you do, yeah, it could be very meaningful. Okay, and we'll put on a price target. I actually don't have a price target on the board here for this bear flag. I don't know why I haven't done it. We will do that next video. I promise you guys. Actually, I'm not going to promise, because there's a chance I forget. But whenever I do remember, I do promise. Then, when I do remember, which can be next video, then I will do it. Okay? If I forget next video, someone remind me in the comments. I will. It will make it more meaningful, and I will remember for next video. All right. With that being said, guys, I'll catch you guys in the next video. I hope you enjoyed this weekly analysis. I know it's long, but these are the videos where I get to explain everything. Okay? And I mean, I like talking about the market, but, like, if you really want to understand the market, it's the people who are taking the interest in it who are going to sit there listening to the boring information. And I mean, it's not boring to me. All right. And that's how I know, like, okay, this is my passion. It's not boring to me. Like, I literally watch my videos over after I post them. And it's just because, like, hey, first of all, I don't want to be messing up, flip-flopping in the video, saying one thing and doing the other. So that's the biggest thing that I try and completely avoid. I try and stay very on track, which I still, like, I struggle with. Clearly, we got a 52-minute video here, but yeah, like, that's something I struggle with very much so. But, like, yeah, I still want to make the best product for the people without, like, just consuming a lot of my time here. It really is a product made for the people. And yeah, I hope you guys enjoyed. Okay, I hope, like, the people, that's what I'm really just trying to say. The people here at the end of the video, okay, the people who watched this long ass video who wanted to learn from the weekly analysis, like, this is not the quick update that I give, like, the daily updates. That's not what the weekly analysis is. The weekly analysis is literally, we go over all charts in detail and all possibilities in detail moving forward for the next week, and anything we got on the radar for the next month, pretty much. We will be talking about it in the weekly analysis each week, all right? And that is why it gets to be this long, all right? So if all you're here for is the quick analysis, don't be mad, all right? Those come every single market update day. I try and drop them 30 minutes before close so everybody has enough time to watch them. Like, watch a 10 to 25-minute video. There you go. You can make your purchases. You got 5 minutes if it's a 25-minute video and you click on it right away. You got 5 minutes to make your buys. Okay, if you want to apply some trade management going off of any info that we shed some light on in the video that you didn't put on your own chart, you didn't notice throughout the day. All right, so yeah, I'm just letting you know. Okay, like, you guys, you have a passion. Okay, if you're at the end of this video, it's because you take an interest in the stock market. You're not just finding this stuff boring, because, like, no human's going to sit. It's a 54-minute video. You will not have your attention span focused on this unless this is interesting to you. You will not. Okay, and nothing is interesting to people unless it is understandable. Okay, because that is ultimately what someone's interest is. They're trying to understand something. And if someone's in the mindset of, like, they don't want it, like, this social media is terrible, right? Like, you don't understand, you just click the next thing. All right, you just click to it, and that's something I've been trying to stray away from. It's just randomly clicking through like YouTube Shorts or something like that. Which I mean, I find myself doing it. They pop up, and I just, once you're in one short, you just keep clicking. You just keep swiping. Like, oh, there's definitely another one. That's how the YouTube algorithm works. Okay, like it's attention. Okay, it's attention, but it's the short term, the short attention spans. That's what it's targeting. Okay, so like. The people who made it to the end of the video, no, it's strictly because, dude, you were on a journey to learn. Straight up, there's no denying it. You're on a journey to learn. You are taking, and even if you're not learning in this video here, and you're just like, hey, you just genuinely enjoy just going over the analysis with me, and you already have these on your charts, and you're not learning anything new, but hey, it's just like, hey, like I just said, anything you might have missed, I definitely have covered here. All right. Yeah, okay, like that's great. Okay, that's great. You definitely, like, dude, you're onto something. I'm just letting you know, like, great fucking job. I'm gonna click this button for you.
That was easy.
There you go. And I'm gonna end the video with that. Congrats for having a passion, guys. And I'll catch you guys next video.